let's talk about investing. For a lot of us, it feels like this massive, complicated thing. But what if we could cut through all that noise? Today, we're going to do just that and build a simple, powerful plan to get you started in like the next 5 minutes.
When you hear the word investing, what pops into your head? Is it, a bunch of people in suits yelling on a trading floor? Crazy charts you can't understand? Yeah, if so, you are definitely not alone. Most people think it's a game only for the experts. But here's the thing. It's really not.
Look, the goal here isn't to turn you into some Wall Street wizard overnight. Nope. We're just going to build a clear, simple framework. Think of it as your personal blueprint for building a financial future you can actually feel good about. Okay, so first things first. Every big project needs a solid plan, right? You wouldn't build a house without a blueprint, and investing is exactly the same. Before a single dollar leaves your bank account, we gotta lay the groundwork. So you have to start with your why. What are you actually investing for? Are you thinking about retirement, saving up for a down payment on a house, your kids' education, or maybe you just want to build up some wealth for the future? Whatever it is, getting crystal clear on that goal, well, that's the foundation for your entire plan. Now, you don't have to become an expert, but knowing a few basics is like a secret weapon. For instance, a stock, it's just a tiny piece of a company. A bond, that's kind of like a loan you give out that pays you back with interest. And a mutual fund, that's just a basket that holds a bunch of stocks or bonds for you. See? Just knowing that helps you cut through the jargon and feel way more in control.
All right, time for a really important question. What's your financial personality? This is all about how you feel about risk. I mean, are you the kind of person who gets anxious every time the market wiggles? Or can you handle the ups and downs? It really just boils down to this. On one side, you might want a slow and steady path. You're more about protecting what you have. On the other side, you might be okay with a bit of a roller coaster ride if it means you could get higher returns down the road. There is no right answer here. The only thing that matters is picking the path that lets you sleep at night.
Okay, blueprint in hand. You've done the prep work. Now, it's time to take action. This is the moment you actually start building. It can feel like the scariest step, but I promise we can make it totally manageable. Let's just bust a huge myth right now. You do not need a lot of money to start investing. Not at all. The key is to start with an amount that you are 100% comfortable with. Whether that's $50, $100, it doesn't matter. The most important thing you can do is simply to start. Now let's talk about building a financial safety net. You've heard that old saying, don't put all your eggs in one basket, right? Well, that is exactly what diversification is. It's just a fancy word for spreading your money around different kinds of investments, like a mix of stocks, bonds, and maybe some other stuff too. And why is this such a big deal? Well, think about it. If one part of your investment mix, maybe stocks, has a really bad year, the other parts can help cushion the blow. It's a super simple way to lower your risk and just smooth out the ride. Okay, let's talk about something that can quietly drain your returns, fees. Just look at this number. A tiny little 2% fee on a $10,000 investment? Well, over 20 years, it could cost you more than $22,000 in lost growth. Wow. That is a huge deal. It's why paying attention to fees and looking for low-cost options is absolutely critical. All right, you've started. You're building. Now comes the part that's all about maintenance and patience. This is the mental game. It's about letting your plan do its thing for the long, long haul. Because investing is not a get-rich-quick thing, it's a get-rich-slow thing. And that's a good thing. Your small start can lead to steady growth. But give it decades, and something incredible happens. It's called compounding. It's when your earnings start making their own earnings. It's like a tiny snowball rolling down a really, really long hill, getting bigger and bigger on its own. Time is your superpower here.
Listen, the market is going to have bad days and bad weeks, maybe even bad years. It's a guarantee. The absolute hardest part of investing is not panicking when that happens. When it feels like the sky is falling, just remember this quote. Stick with the plan you made when you were calm and rational, because your long-term strategy shouldn't change just because the market is having a short-term tantrum.
Now, staying the course doesn't mean you set it and completely forget about it for 30 years. It's a really good idea to schedule a quick checkup, maybe once a year. It's not complicated.
You're just taking a quick peek to make sure your investments are still lined up with your goals. And if they're not, you can make a few small tweaks.
So we have covered a ton of ground, and it's totally normal to feel like you might want a guide for all of this. Which brings us to our last and super important tip. Having a solid plan is fantastic, but sometimes talking to a pro can make an incredible difference. And let's be clear, getting advice from a certified financial advisor is not a sign that you've failed. It's a sign that you're smart. They can help you fine-tune everything and feel even more confident.
So let's just boil this all down. It really comes down to these 3 pillars. First, you create your blueprint. Figure out your goals and what kind of risk you're comfortable with. Second, you take smart action. You start small, you spread your investments out, and you keep an eye on those fees. And third, you master your own mind. You stay patient, you stay disciplined, and you play the long game.
And that's it. That's the framework. Your financial future, it's a story that hasn't been written yet, and you're the author. So the only question left is, what's that first chapter going to be?